In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. We will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical structure resistance area. In fact, this zone was acting as previous monthly resistance here, again resistance here, again resistance here as the market started testing this zone. And in a situation like this, what we could expect is a deeper test of this zone as already happened here and here. So we could expect a bit more short-term bullish price action before then getting a potential rejection to the downside. Now, if we drop down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see how at the moment the market is breaking above this quite strong area of previous weekly resistance turn support here. Now, as the market is testing previous resistance turn support, we could expect this potential rejection to the upside, which is exactly what the market is currently giving us. And in a situation like this, more bullish price action could be expected away from this zone. Now, if we go down on the daily, what do we see? First of all, I did speak about gold a few days ago when the market was at this area. I explained all the reasons for which we could expect this rejection to the upside, and that is in fact exactly what the market gave us. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. However, at the moment, what do we have now? From a daily perspective, it's quite clear how we have now broken above this previous daily high. In fact, this area was acting as previous resistance here, again resistance here. All this previous resistance, now that the market has broken it to the upside, is turned support here. So what we could expect is a potential retest of this previous resistance turn support before then potentially getting rejected to the upside. We can also notice that if we take our Fibonacci from the low to the high of this impulse, we have the 0.32 and 50% Fibonacci retracements, both lining up exactly with this previous resistance turn support, creating confluence of support at this area that we could expect the market to potentially test and then to reject to the upside. Now, so that if the market will go and retest this previous resistance turn support, there is a good probability to see a potential rejection to the upside. So if the market will go and retest this area, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.